Welcome to Multiple Perspectives. This is your weekend view, where we bring you the latest insights and opportunity in the world of real estate investing. I'm Daniel Brereton. Today, we'll be taking a look at the Midwest, specifically the current state of the housing market. A report from Realtor.com sheds some light on recent trends for this market. The Midwest, like other regions, is experiencing a decrease in the number of homes actively for sale and in total unsold homes. In October, there were 4.8 fewer homes for sale in the Midwest compared to the previous year. Despite the monthly decrease in inventory, it remains significantly below typical levels from 2017 to 2019. Single-family construction in the Midwest, while holding steady in October, was down over 11% year-to-date. High mortgage rates have depressed demand, but the lack of existing home inventory supports new construction. This trend indicates an ongoing need for new housing to meet market demands, especially in areas with limited housing inventory. Despite these trends, the median home price in the Midwest increased over 4.2% from last year. And this is in spite of a decline in existing home sales compared to a year ago. We see this as suggesting a resilient market underpinned by consistent demand. Higher mortgage rates have increased the monthly cost of financing a typical home, requiring higher household incomes for the same sort of home purchase. And this financial pressure might encourage potential buyers to look for newly built homes, which can offer more efficient designs and financing options. The combination of steady demand, low inventory, and resilient pricing in the Midwest creates an environment where new single-family housing developments are not only necessary, but also potentially lucrative. This necessity is amplified by the regional decline in construction starts and new listings, and that points to a market gap that new developments could potentially fill. These factors collectively, they paint a picture of a region ripe for investment in new single-family housing, particularly in areas with strong growth potential and a track record of resilient property values. Now, given this backdrop, let's dive into a compelling investment opportunity, the Lee's Summit development. This development is a $3 million limited partner equity investment in a to-be-built 226-unit community in Lee's Summit, Missouri, and that's outside of Kansas City. With an attractive target net IRR, the total return of the investment, this growth-oriented investment is timely, considering the current shortage of single-family homes in the Midwest. The experienced sponsors and a well-planned development strategy add to its appeal. A reminder for our investors, Larson Capital Management is a sponsor on this development. And that group recently offered another development project in Oklahoma City for an industrial facility, making great progress on that so far. So Lee's Summit development, that presents a unique opportunity in a market that's ripe for new housing, and for investors looking to capitalize on the current market dynamics in the Midwest. That's all for this weekend's view. Join us next time for more insights into the real estate market. If you're interested in learning more about this investment or any other opportunities on our platform, you can visit our website at EquityMultiple.com or contact our investor relations team at ir@EquityMultiple.com. Thanks for listening, and we'll see you next weekend.
This communication is not to be construed as an offer to sell or the solicitation of an offer to buy any security or provide investment advice. Any such offer or solicitation can only be made by means of the delivery of a confidential private offering memorandum. To the extent that performance information is contained in this podcast, past performance is not necessarily indicative of the future results, and all figures are estimated and unaudited unless otherwise noted.